Growth or value, a study of rotation. Growth has been leadership for so long. Is it possible that value can actually lead growth? Can value be the dominant performing theme in the market, or is growth the dominant player all the time? Let's do a study of rotation. Let's see if Wyckoff can help us determine when one leads and one lags and how to tell when things are changing. Also, let's talk about the dollar because you asked for it, and I'm here to talk about the things that interest you. Hello, my name is Bruce Fraser. Welcome to Power Charting. Let's get started. This is the agenda for today. We're going to go really fast. We have a lot to do. Growth versus value, a study, analysis of the dollar, industry group analysis, which is related to the growth versus value theme. And then we'll do some chart studies. We're going to talk a little bit about stocks that are in distribution. So let's look at these schematics again. We first looked at them last week. And I want to talk about the distribution versus reaccumulation phenomenon and how that is a paradox. I think that I didn't discuss it well enough last time. Let's go through this. Distribution occurs after a long markup phase, preliminary supply, buying climax, automatic reaction. This is phase A. This area right here is the stopping action of the prior trend. Paradox is this also is typically how reaccumulation gets stopped also. I'll show you that in a minute. And then classic distribution here, you can see there's a crowning top type formation, last point of supply, which is a lower peak, and then weakness throughout till you get to support. This is phase D, and then just an outright breakdown. You can see volatility increases throughout, as can be seen by this lower trending trend line, and volatility is becoming ever greater as stock goes from strong hands to weak. Again, another distribution schematic is an example, a big bullish trend that gets stopped, buying climax, automatic reaction, range bound condition, and this is a classic broadening type formation with an upthrust after distribution. Very common, you see this a lot. This catches all of the momentum players, and then you have just an outright breakdown. Volatility ever increasing throughout, again, because weak hands are holding this stock under distribution, or it could be the market. Here's the paradox. Distribution begins with a big uptrend ending. Reaccumulation begins with a big uptrend ending. The difference is that you can see attributes of absorption occurring as you go through reaccumulation as stock is going back into strong hands. Stock was in strong hands down here. Then the uptrend begins anew. Here, the opposite phenomenon is occurring. Oftentimes, traders confuse these two conditions, and this is what we work so hard on in Wyckoff analysis, is being able to distinguish one from the other. So you can go back and you can read my blogs about both distribution and reaccumulation. The important thing to know is that both begin the same way and they end vastly differently. Okay, value versus growth. So here you can see we're using a proxy, which is the Vanguard Value ETF, and we're comparing it on a relative strength basis to the Triple Q Trust. Triple Q ETF is the Nasdaq 100. This goes all the way back to 06, well, 04. 06, you can see that as the line is dropping, this shows that growth is dominant. It's the dominant theme as the trend is down, meaning that the triple Qs are outperforming the VTV. So being in the dominant theme, which is growth, is where you're going to get outperformance. Here we can see a classic trend channel. traditional use of trend lines with an overhead supply line, an oversold line underneath. Look what's happened here is that we've had in the last year or so an acceleration of growth, meaning growth has become a even more dominant advancing theme. So acceleration of growth as this line has gone downward. Well, is it always the case that growth is going to outperform? Because let's face it, growth is growth. Or are there times when value can become the dominant theme and where investors should be focusing their attention? Here is a longer term. That was all the history we had on that last chart. Here is just using the proxy of the Homestead Value Mutual Fund and comparing it again to the triple Qs. And in this case, you can see downward trend, classic oversold line over the market, trend channel, and then an attempt to reverse up for about a year or so, and then back into a growth dominated downward trend with acceleration coming at the end. Well, look what happened here in 2000, 2001 when the Nasdaq stocks, the dot-com stocks became massively overvalued. And then in the bear market of 01, 02, there was a much better performance from value than from growth, which is this line going almost vertical. Now, both themes were generally dropping at that time because it was a bear market. The true bull market started right about here, 03, 04, and you can see that you have a 3-year advance of value versus growth as defined by the Homestead Value Fund. But it does demonstrate that there is a period, multi-year period, when value can outperform growth in a bull market. So this is something for us to keep in mind. Now, does this mean that we continue to go ever downward? Well, let's see if we can nuance this data and determine whether or not there might be a Wyckofffian analysis that could maybe give us an early clue about the change or the rotation from growth back to value. Well, here, let's look at the most recent data. This is actually a 4-hour chart. We're looking at intraday data, 4-hour data. And this is the, again, back to the Vanguard value. And the reason we're using this because we can look at intraday data, which is a little more interesting. Downward trend, you can see supply line over the top, oversold line underneath. Notice what happens in July. We talked about this at the time that there was a throw over of the triple Qs or the growth theme into a climactic surge, which we're seeing here as a selling climax in this ratio. And so selling climax, automatic rally sets a trading range. Well, we now have a trading range from July on. Here we are in mid to late September and we're still in that trading range. Well, look, oversold and a throw under condition produces the selling climax, automatic rally, resistance and support, and up thrust. And now we have what looks like a spring, which has gone down to test the bottom of the channel, and a very robust rally, the best rally that we've seen here really since back in this area in May, June. And so now we can't say that the accumulation is complete if this is in fact accumulation, but we can see that it's attempting to get up to the resistance area, two forms of resistance really, which is the downtrend line and also the resistance line. So if this is accumulation forming, we would expect this to result in a sign of strength. Maybe it's got to pull back again and then have a sign of strength. It's too early to tell, but we can see the evidence of the potential for accumulation. Look at this reaction in here. It's very tight, shallow, looks like a backup in an ongoing uptrend. So we're going to watch this very closely because this seems to indicate that there could be, at least for the short term, an attempt for value to become the dominant rotational theme for a period of time, possibly for a long time. Too early to know. But we are looking for evidence of this change of theme. So let's go look at some other stocks to see whether or not there could be evidence of rotation occurring in other places. Here is the Nasdaq 100. You've seen this chart repeatedly, and this particular chart you can see here, and this is through the 17th today, as we're talking about this 60-minute data, and this is a demand line under the market, establishes the trend. Well, we started to talk about this chart right here. Well, this was an overbought buying climax condition and a failure. Well, this failure has been substantial and down to the demand line where we would normally look for an attempted bounce into a secondary test. And the secondary test would then come back down again. Well, we're not getting that at all. What we're actually getting is we're getting a very tight condition here that looks like it might even be characteristic of being under the ice. It cannot lift its head. It can't get any kind of a decent rally going, which is what we would normally expect. Something akin to this here. Good rally occurs and then it has to come back for a test before the uptrend can begin. Here we're not getting that, which shows that the NASDAQ 100, our growth theme, is languishing, and there appears to be a lack of demand to be able to drive the stocks in this index back up again. So we are watching this very closely. Today is a particularly weak day in the NASDAQ 100, and so we will be keeping a very close eye on this. Lastly, this is the NASDAQ composite. We have data here back to 81, 82, and here is a reverse use of trend lines on these 2 points here, and right at this accelerating peak into the dot-com craze, you can see acceleration. It gets very, very close to this overhead trend line and then has a massive failure thereafter. Well, now we can see we can draw a similar type of line here and here over the market, and there's been an acceleration of sorts, and we're going to watch this because if it can return back to the trend line, that will be a substantial correction. So too early to tell, but you can see that we have an accelerating market here, overbought condition, climactic behavior, and we would then look for distribution to occur over the market. This was a rather large distribution area here. We would expect the same to occur here also, but we will be watching that. Okay, so lastly, here is a 4-hour chart of the S&P 500. This goes back to May. This is the upward stride of the market here, demand line, classic trend line construction. And here, this correction, notice that the S&P could not get up to its overbought condition where the NASDAQ 100 overthrew it. Well, here it's coming back down, touches the demand line, and again, like the NASDAQ, it's basically just going sideways, not an impressive rally off of an oversold condition, which shows that there is an abundance of supply present in the S&P 500 stocks and weakness today. So we would be looking, as it's approaching the support area, we will be watching for the S&P to rally here and show that it's got some additional demand in it that can drive it back up into the channel. May not have that, but we're going to watch it and see what happens. Okay, so now I'm going to stop recording here for a second, and we're going to shift gears to the dollar. You, my friends, asked for this analysis of the dollar, and I am here to serve. So I love that you have discovered this great study, case study on the dollar. Here we're looking at the US dollar index, $USD, which is a cash settled end of day data. And what I believe that you are seeing here is you're seeing, let me put on the annotation tools, you're seeing this, what looks to be a beautiful potential accumulation structure. Well, it's possible that this is redistribution as took place here. We'll wait and see, but let's ask the question, could this be accumulation? And with that, clear this drawing, and let's go to a chart that we have of the dollar. This is the US dollar index, and you can see here that there's a large area of a trading range that goes from 2014 all the way back to 04. So range bound. It has a pivot quality to it, which shows accumulation was forming over a very large period of time. Because it's the dollar, we want to be very careful about not overcounting the point and figure. So we've taken from the last point of support over here to 2011 to this important test of the prior low in 08. We've taken this count here, and look what it does. It takes us right from 79 to 100. And I believe this is 106. So a really substantial move. And then look what happens. We have a very large long-term trading range in the dollar, which could be accumulation for another move up. Why not? But, and then keeping in mind that this area here could all be accumulation for a very large move. And so we will be looking out for that. And I would suggest that the count we would want to look at would be this count and this count right here. So we will be keeping an eye on that, but I am going to show you a shorter term count here in a minute. Okay, so here, let's go back. Let's clean this up. And let's look at the dollar in the UUP. The reason that we want to look at the UUP versus the US dollar is because we can look at intraday data. This is a 2-hour chart. We can really drill in and nuance these charts. So here, classic climactic surge with a gap, and then another climactic surge with a gap, range bound condition here and here. This is what I believe that you're seeing in this chart, which is very compelling. But notice, looking at the big picture here, that each one of these rallies, which appears to be ever greater as it goes up, is a lower high. Now, that doesn't mean this is not accumulation, but it does suggest that there is supply over the market. There may be a need to go back down towards support again, put in a last point of support if this is accumulation for a more important move up. So here, let's go in and look at this chart with some markups. So preliminary support, and then you have an attempt to rally, always, which is what occurs after preliminary support, and then a selling climax. Look at the volume, big cluster of selling here that actually produces a selling climax and then a reversal up into a more important rally. Another attempt to go down with a gap at the end. This takes out support, but then shows buoyancy by coming back in. Pretty good volume comes in here, and a gap in the upward direction. Now there is another decline, which we're going to call a spring, which clears out these two key prior lows, and then it comes right back up in. Now, the volume isn't that high, so we're going to call this a number 3 spring, which doesn't need to be tested. And the test actually comes from a much higher level. And also look at the volume come in as it's turning off of this area, which I believe this is what you all are seeing in this chart, which is really constructive. So now we can see that the dollar is not pushing up to the resistance area, but instead has had another series of lower highs through here. This looks now like a hinge. So a hinge can break either way out of this area. This is a chart through today. So it wouldn't be surprising if the dollar went back down to the support area or even slightly through it before it turned up, but it could do either. And if it's accumulation, what we want to see is we want to see if there is an LPS for it to turn off of that and then start to go vertical right up to the resistance area and through it to form a sign of strength. Then we can take a point and figure count. So with that in mind, we can see this might be unfinished business right now, but it is on the hinge. This could be a very exciting moment. Now, this does not mean that a dollar trader, and I'm not making any recommendations here, but this is true for any kind of accumulation structure, whether it be a stock or commodity or currency, is that there are these low risk places to take trades. One of them is on the spring, low volume spring, and a good reversal. Those good demand bars could be an excellent place to start to put on a tranche. Then you have a test that comes back to support. That represents another potential place to establish a tranche or initiate. Then thereafter, we would look for either an LPS as another place to put a trade on, or a backup after some kind of a phase D rally backup type structure, and certainly on a backup to old resistance, which is now new support. So there's a number of places to initiate. We don't have to wait until the accumulation is complete, but we must be exceptional risk managers. Okay, so last thing I want to look at here is let's look at a US dollar UUP point and figure chart. This is ATR scaling, 3-box reversal method, 2 segments that we're counting here. And here we're 0.03 is the ATR scaling, and these are the counts, and I'll leave these for you to study because we have to move on. So again, I'm going to pause for a minute. I'll be right back. We have about 6 minutes left. Let's really crank it out here and cover as much ground as we can. How would we know that value is starting to dominate in the marketplace? Well, we would look at industry groups as an example. So this is from a new newsletter that Roman and I are producing, and you can go to Wyckoff Analytics and sign up for samples of that newsletter. The next few issues are going to be available in his normal weekend newsletter output. So have a look at that. Here is U.S. commercial vehicles and trucks. So the real economy runs on trucks. So you can see here a beautiful accumulation structure in relative strength after a long-term downtrend, underperformance. This is where growth has been dominating, value has been lagging. So here is a case where trucking has been in an uptrend. So beautiful uptrend in this chart. Well, we would look for that again here. You can see this could be large accumulation in the this index. So here is one example. Here's some charts for you to go look at in the space. Here is home construction. Notice that home construction again has been under a large wide-ranging trading range. This could be a large accumulation. Notice now that relative strength is in an uptrend. It's confirmed up. Here is the prior highs back in 2017, 2018, and now home construction is taking out that peak on relative strength. Here's railroads. Again, this is another example of the real economy being run on railroads. Look here, railroads were dominant for a long time, went into what looks like a reaccumulation on relative strength. Now the trend is back up again. It's just emerging into a relative strength uptrend as railroads are breaking out to new highs. Very interesting, and again, we would consider that an example of value over growth. And the last one let's look at, this is trucking. And so you can see that trucks are up, but also trucking is up. And so again, here's a big reaccumulation structure and a resolution to the upside. Okay, so let's now turn our attention to, in this case, this is Microsoft, and you can see, look at this large distribution type structure that's occurred. Here's accumulation here, which goes right up to around the 204 level. But now we have this very large distribution that's taking place. Well, let's have a look at the vertical chart. And here's an uptrending channel in Microsoft with a throw over here, pulls back to the oversold line, and now a climactic surge which goes up to the trend line on two levels. So the steep trend line and the channel throws over, and now it's had a very important reaction back out of that. Look, there's no lift at all in this in Microsoft as it's consolidating here, and now look at this structure. Looks like potential distribution with an upthrust after distribution. And as we saw in the model, upthrust after distributions often just go right down to support, consolidate, and then keep going. So this so far is acting in that manner. Here is, now again, Microsoft is a growth theme. So here's Netflix. So notice here, big uptrending channel, normal use of trend lines. Look at this throw over in July. So here in the case of Netflix, it's turned in from a true uptrend into a trading range in July with a throw over, an overbought condition, very much a buying climactic surge, automatic reaction, range bound condition, secondary test. This is looking an awful lot like the schematic where the LPSY makes a lower high. Now you have a touch of the demand line from underneath, and now you have weakness that's taking this down through support, and it's very weak today. So now, could this rally here? Absolutely it could rally, but we would be watching for a last point of supply type structure. As a matter of fact, I think that the S&P and the Nasdaq both are in a place where a rally is definitely possible. Here is one, actually this is Autodesk with an upthrust after distribution at the end. You can see it's a big uptrend, classic distribution. I have a little short position in this. I also own Microsoft, so it's sort of a good news, bad news thing for me. But here we are. And so you can see now that Autodesk is below important support. And with that, gotta go. Thanks for being here, and we will see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.